Friday, March the 2nd. Hope everybody's having an absolutely amazing day. Welcome to the Daily Market Commentary. I'm your host, Chuck Fulkerson. Glad you're able to join us today, and we're going to do what we do each and every day, take a look at the markets from a technical perspective to identify potential trading opportunities and to teach how these areas and levels work on both reversal and breakouts. So before we get rolling, one of the things for those of you new to the channel, welcome. Please make sure you hit the subscribe link so that you can get the updates as they come out. I try to do these in the mornings before the market gets rolling, so you have time to set your day up. So what I want to talk about today, I'm going to use a baseball analogy a little bit. If you have a batter that goes 2 for 4 and has 2 strikeouts and 2 doubles, then that's going to be a pretty good day at the plate, right? If you've got a batter that's 0 for 4, that's 0 for 4 and they got 4 strikeouts, it's going to be a fairly tough day, but they come back and play the next day. If you've got a batter that goes 4 for 4 and they have 4 doubles or two homers and 2 doubles, then they shouldn't be too happy. And for those of you that don't live in the U.S. and don't understand baseball, sorry. My point is that you can never get too high and you can never get too low when you have a challenging week. Don't get too low. When you have a great week, don't get too high on yourself. And I think that we have a tendency to do that in the financial markets, especially when you're looking at the markets every day from a trading perspective. You know, I'm going to go through the same markets we go through every day today. And yesterday we had 2 positions that got stopped out for losses, and we had 2 of them that kept running. And so the key is, as long as your losses don't hurt you too bad and your wins can allow you to keep running, then you're going to be okay. And that's really what's important when we're looking at trades. So let's go ahead and dive into it right away. I'm going to start with the S&P. And the S&P, we spoke yesterday. I thought that we were going to drop down to this area here and get a little bit of a bounce, and we got a stop out. Now, luckily, this is a pretty small area, pretty small level. You know, we look for a nice strong arrival into the area, and we got a nice strong arrival in, and then price came right back through out of it. And it just did not hold and was unable to maintain that level. Now, that tells me when I move this to a bigger time period, moving this to a 4-hour chart, by getting below that area, we've now put in lower swing low. We've put in a lower swing low as well as a lower swing high. So we've switched our trend in the 4-hour time period. On the daily chart, we have not officially yet switched our trend, because to have a downtrend, you need to have a lower swing high and a lower swing low. We certainly have the lower swing low. We do not yet have the lower swing high. Now, just to be clear, we're still inside the movement of what occurred, of Volageddon, if you will. And so while we had a pretty big trading day yesterday, we're still inside this movement of those 3 huge volatility days. Now, I wouldn't be surprised if we got a little bit of a rally back up today on price action. From the big picture scale, for those of you that are more of the investor mindset, from the big picture scale, we are still in an upward trending environment. As an investor, we've had some more volatility creep into the market. I say creep, smash into the market, but we've not broken, we've not set a new downward position on the weekly time period. You know, it reminds me a little bit of, could we be seeing a little bit more of what happened through this period in 2015, where we had that huge shot down before then popping back up a little bit, falling, and then rallying back close to those highs, dropping again. You know, this was really where I thought that the market was about to kind of fall off, and then we rallied to all-time highs off of there with the new election. Yesterday's moves were very fundamentally driven on the tariff imposition that was talked about by President Trump on raw materials on steel and those imports. And so, those news things will move the market. And when you think about it, we went straight up on the taxes and we came back down on taxes. So interesting thing to kind of consider when looking at it. So as far as our trade setup for today, I don't really have a whole lot set up in the S&P. We still have some areas down below us that could be good opportunities, kind of coming into the future. I will put a breakout long area up here. Now, this is pretty far away. You know what? I'm going to put it right here, actually. It's it's fairly far away from current price. But if we get some sort of a parabolic move up, this could be a good opportunity on a breakout long where we could see price move, a bit higher. So taking a look next, we have to slide over to the Nasdaq. Now, the Nasdaq, we did not have a trade set up for a potential long, so we still have one down below us here that could act as an opportunity. I'm going to put the same breakout line above this high here in case you'd rather hop in on a potential Nasdaq long as well. Looking at crude oil. So crude oil, we have really nothing that met entry. We've got nothing in play. We had a long set up here. Price hasn't come anywhere near that area yet. I'm looking for a potential reversal in this range, but I'm not willing to jump in front of it as of yet. So I'm just going to hold off with really anything on crude. Definitely not holding anything over the weekend. That's for darn sure. Gold. Now, gold, I put this in yesterday as I expected a potential reversal out of gold. We did not get that reversal yesterday, and so there's our second strikeout. Still an opportunity way up here for us to look at a potential reversal in the gold markets. So far we're 0 for 2 on our strikeouts, right? Well, let's go ahead and move into our bond markets: Euro, Aussie, and Canadian. So in our bond arena, we still have a long trade set up over here. Have not quite reached that area yet a short have not quite reached that area yet in the bonds. So we'll see when price gets to that region there for a potential reversal. Nothing new to add to that chart. Same thing in the Aussie. Nothing new to add as I've got two areas in between. We're sitting between potential buying and selling areas. Our euro position. So here we go. Price came down, hit the reversal in the euro, and we call this a skadoosh. As price has really moved out of that area with a lot of momentum, a lot of strength. So if you are in this one, do the happy dance and maybe take your stop. And I would look at taking and adjusting that stop. When you get in, your target is going to be your opposing fair price value area. You may have had some up here. Ultimately, your target is right about here, and we're just about to that profit target right now. If you wanted to let that profit continue to run, you may take your stop and move it up underneath this buying area. So there's an opportunity in that one. Canadian dollar. We had a breakout on the Canadian dollar, and so the Canadian dollar, that breakout is continuing to run. We got a little bit of a rally up, and now it's starting to continue to fall again. So we have actually a breakdown here, and we got another breakdown potential below this area right in through here. So the Canadian and the euro both running our direction. Next, let's take a look at the Great British Pound, Japanese Yen. Great British Pound, we've not yet come into the areas that we identified as potential reversals, so we're still waiting on those. The Japanese Yen breakout. We had put a dashed line here. I wanted to say, well, just in case, because as we were coming into it with a fair amount of speed, you've got to have a fairly wide profit, fairly wide stop loss below the prior pivot. Price has now come up and given you a very strong move, taking the ability to take your stop and adjust it to lock in some gains. So this is what I was talking about earlier. If you concentrate so much on the losses, then you get too down on yourself. If you concentrate too much on the wins, then you get too high on yourself and you get overly confident. The best thing that you can do is just follow the plan. I say that a lot. When you get a plan, follow the plan. If you don't have a plan, you're sunk. And just maintain your composure and your consistency over time. And that is really what propels you, and that's why we do this every day. I will tell you, it's not always the easiest thing in the world to get up in the morning and go to the gym and make time to get this thing out before the market opens. But I really think it's important for not only for me as a trader to see it every day. It forces me to do the same thing every day. It's part of my routine, and hopefully it also becomes part of yours. So if you would, pass it along, share it with somebody. Would love to have that. If you've got anything that I can help you with, please don't hesitate to send me an email, chuck@iiefinancial.com. You can always call our offices, by the way, 832-953-4998. I'd love to talk to you and see if there's anything we can do to help you out on your investing world. So until next time, everybody, I hope you have a great, great day. I will have the weekend edition out on Sunday evening. And thank you so much. See you soon.